What's going on, guys? Welcome back to another video here. So what we're going to be covering here are some very significant catalysts that we have coming up throughout the rest of this week and some very important pieces of news that came out today that are going to be driving price movements going forward in a couple of markets. There's going to be some kind of sympathy plays as well that I want you guys to be aware of because these things are incredibly important. And if you guys are going to be holding any positions short term, overnight, any swing trades, these are things that you need to be aware of in order to make well-informed and potentially more successful trades. So guys, before we get into anything else, if you guys wouldn't mind hitting that like button down below, cost you nothing to do it. It just helps us get this information out to as many people who want to learn. And make sure you guys subscribe and hit that notification bell for more videos like this. So let's get right into it over here. First, we got to take a little bit of a look at what's going on with the overall market here right at close. So we saw SPY close at 390.76. That 390 level is very key. You've heard me talk about this level a couple of times. A couple of reasons. Psychological level, there are a lot of options put contracts that are hanging out at that 390 level for the September monthly options expiration period. And again, with the amount of options that are coming into open interest on this chain, it does create that potential for a gamma squeeze to the downside. And that's something that we have seen a little bit of since we made that first gamma squeeze video a couple of weeks ago. Now, when we're looking at this market here as well, we have this 1348 crossdown on this daily time frame. Again, it's the most profitable EMA crossover. So we are most likely going to see some more downside as well. And like I said in the other video earlier today, that I want you guys to really think about what is the actual drivers of sentiment in the market right now? Well, with what we're going to be going over here, this is not only going to provide us a little bit of an indication whether or not some of these economic projections are right, but it's going to give us some guidance going forward throughout the next couple of weeks and maybe even quarter as well. And again, guys, if you guys do want a little bit more access into our trading strategy here and our community, make sure you check out that link down below. It is the best place to come and learn how to trade. Pythagoras, the predictive algorithm on the daily time frame, Trader Joe just cracked 30% today, Invictus. This is an awesome place to come and learn if you guys are interested in really taking control of your accounts every single day and putting that power of compound interest on your side. So again, link down below if you guys are interested. Now, let's kind of get into this first note here of what happened today. So China agrees to pay for Russian gas in rubles and yuan. So Russia's pushing to reduce the reliance on the US dollar and boost economic ties with China amid Western sanctions. Now, here's the issue with this. Right now, what we're seeing is, and we've seen this for many, many years, is that oil is transacted in US dollars. So it creates more strength in the US dollar as the global reserve currency. Now, if these oil transactions were to be basically completed in other currencies, well, what would then happen is it devalues the US currency. What a lot of these countries do, since oil is such a very, very hot commodity, is that they hold a lot of US dollars in their banks in order to complete these oil transactions. Now, if they no longer needed all of these dollars in their reserves in order to facilitate all of the oil transactions that their country needs, well, then you would see a lot of selling pressure on the dollar, devalues the dollar, could lead to a lot of inflation, and honestly kind of knock it off as the global reserve currency, and you would see US companies get very significantly affected by that as well. Is that going to happen? Well, with what we've seen recently in the oil market, with this situation with Russia and Ukraine, with the OPEC production cut when they really didn't need to cut any output, well, there's a lot of political nonsense going on. Now, could this just be a posturing move by Russia? Yeah, it could be, but at the end of the day, they are going to want to kind of build these ties with China as well and create that relationship. So this is going to be something that we need to keep a lookout for going forward because, as mentioned here, it's a sign of warming relations between Beijing and Moscow. And there's a comment here: the new payment mechanism is mutually beneficial, timely, reliable, and practical solution. And then coming down here will become an excellent example for other companies. Now, what they're trying to do here is kind of knock the US off their top spot. Is that going to happen? Well, we don't know yet, but that's something that we need to look at going forward and something to keep in mind as we're thinking about oil, these different global political actions that are being taken and how they affect the overall macro economy. Now, again, tomorrow we also are going to have this Apple event here. So Typically what happens with a lot of Apple events here, I don't really want to spend too much time on this because we don't really trade fully based off of news, but there can be a little bit more volatility coming into this Apple event. They're expected to debut their new iPhone 14 lineup, so you could see a little bit of excitement about that. But again, I would not take personally, I would not take trades just based off of Apple having an event, because you have to think about as a trader where your edge is. We were talking about this in the public live stream today. If you think that you know that Apple has an event coming up where they're going to be unveiling a new phone, well, you have information that everybody else has access to as well. So you think you have an edge when you actually don't, and that's when you get hurt in the market, when you are operating based off of information that you think to be true or something that not everybody else has, when in reality, they actually do. So be careful with this Apple event tomorrow. We could see a little bit more volatility in the market if we end up seeing some movement out of Apple because it is such a large S&P component. But again, just something to keep a lookout here as well. Now, looking at what we have going forward for kind of the other events that we have this week here too, we are going to be getting the Bank of Canada's rate decision tomorrow. Now, this is going to be very similar to what we have for our FOMC meetings. They are most likely going to be raising interest rates by 75 basis points. Some key notes out of there, very similar to what we would hear from Powell. So if you guys do start to see markets start to move, be very, very aware that this could be a result of the Bank of Canada increasing their interest rates by more than expected, less than expected, or any of the guidance that is going to be coming out from this meeting that they are going to be having tomorrow. And again, we're also going to be getting the European Central Bank's rate decision coming tomorrow, or not tomorrow, Thursday as well. Now, this is also going to be on the same day that Jerome Powell is going to be giving statements at this Cato Institute's 40th Annual Monetary Conference. Now, typically at these conferences here, some of the questions that are going to be asked of Powell, he's not going to be able to answer. What he's most likely going to do is refer to a lot of the statements that he has made in the past and say, well, we're going to look at the data as it comes in and base our basically analysis accordingly. Odds are he's not going to come out with anything new at this meeting here, and he's basically going to come out and say, hey, this is kind of what we're looking at right here. He can lean a little bit lesser on the hawkish side after the jobs data that came out last week. So if there is anything that we need to really look out for, it's Powell's reaction and his overall sentiment to the increasing unemployment data, or the rise in unemployment that we saw last week. The unemployment rate was estimated to be at 3.5%, and it came out at 3.7%. So thinking about that, the Fed essentially needs a lot of people to kind of leave the workforce to take away a lot of those demand side pressure aspects of inflation here. So again, that's kind of what we need to look for going into Powell. Apple's event tomorrow. We're also going to be getting that Bank of Canada's rate decision tomorrow as well. And then we're also going to be getting that European Central Bank decision tomorrow as well. So guys, it's going to be a volatile week. We do have a lot of things that we need to look forward to. But again, if we are going to be trading very short-term options here within 2 weeks, maybe a week as well, 1348 is going to tell you exactly where things are most likely headed. So guys, that is going to wrap up this video for this evening. If you guys did enjoy the information and analysis that I provided for you guys in this video here this evening, make sure you guys go down and hit that like button. It costs you nothing to do it. It just helps us out a whole lot getting this information out to as many people who do want to learn. If you guys do want to see more videos like this too, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So other than that, guys, I'll see you in the next one in the live stream tomorrow morning with our group. Peace.